Hey, good morning, good afternoon. All right, we'll get started. Just a minute. Hello, Jose. How are you?
Good. How are you?
Good, good. It's never a dull day. It's never a dull day, especially with the new administration.
Crazy, crazy.
There's always something every week. So, doing good, doing good. Who else? Who do we have here? Let me go through some names. Who all we got? Hey, Aditya, good to see you. Good to see you.
Good morning, Virgil.
Morning, morning. Welcome back.
Thank you. Thank you.
Right, we got uh, Alfred, Jose, Kristen, familiar name, Leslin. Leslin, is this your first time you're joining here?
Yeah, it's my first time here.
All right, welcome, welcome.
Mm,
Feel
Thank
free
you.
to join again. You'll find something that is useful. Uh, I think Lilia Morris, other name, Shreya. Shreya, is this first time? Maybe I don't recall the name. Maybe last meeting I didn't see the names.
This is my first time.
All right, welcome. What brings you here?
To learn more about options out there.
Okay, everyone is interested in options. So I generally don't get into the details of options in this meeting because I've done boot camps on options and there is a video available on my website. But if you have a specific questions, shoot. If anyone else wants to bring up any, trade that we want to review, feel free, bring it up. But I've covered the basics of options and how to use it to manage your portfolio and whatnot. It's a series of almost 13 I would say sessions, and you can find all the recordings available on the website for free. So I yeah, like in this meeting I generally don't get into options unless there is some question. Okay. But yeah, we happy to talk about all other stuff. Okay, are you covering AMD earning today? No, I think I missed AMD. Hold on, let me just see. Probably we can, quickly at least build up in terms of their their financial numbers. At least that I can do. We'll do that in meeting. But sorry, I missed on AMD. Okay. All right. Looks like I guess I covered all people. Okay, so let's get started, guys. Pretty exciting week. Like I think I was telling to Jose, it's never a dull week when it comes to investing. The things always keep on changing, and with the new administration, you don't even know what will change. Okay, so yeah, pretty busy and pretty exciting week. So today I want to talk about earnings. This is the earnings season. I guess maybe we are two-thirds into earnings. At least I still have some companies. I mean, I don't think we can call earnings as done unless, until Nvidia, the the only company that matters for the stock market reports their earnings, and Nvidia reports it very late in the cycle. You know, after all the techs are done, everything else is done. Nvidia comes very late. So yeah, but I guess from when you're looking from S&P 500 companies, the biggest companies that matter the most, at least for me, I think two-thirds of the companies have already reported earnings. And now we are kind of almost on the second half of earnings. So we're gonna review a few earnings. Google, uh, formerly it's called Alphabet. I just can't, that name has not stuck to me yet. So it's still Google for me and it's still Facebook for me. So Google, Uber, there has been some activist investor, a friendly activist investor activity in Uber. So gonna look at that. Doximity is a company that you may not have heard of because this is very underfollowed stock. But I've been on this for a few years. So we'll look at that, and then Pinterest, and then maybe we'll do AMD. Okay. Other thing I want to do is I think I long back I'd read a book. Long back means probably it's been a few months, maybe last year, or was it 2023? So around the stock market bubble. So I thought maybe it will be a good idea to kind of give you an idea, some aspects from that book, because what we are seeing in the markets or what happens in the market is nothing new. Instruments change, the companies change, uh, the the financial institutions change, our behavior stay the same. Stock market behavior stay the same. So gonna look a little bit into the history of the stock market bubble, and of course we look into the macro, little bit on the crypto side, option. If you guys want to talk about any strategy, I think it um 2 sessions before we looked at all animal spirit strategies, so kind of a tapped out on strategies. But if you have a question, we can discuss that. Yeah, that's pretty much for today's agenda, and we'll spend some time in. And if you have anything else you guys watching, anything new on your radar? Nothing new. Come on, there's so many things happening in the market. All right, won't pressurize for it. So let's get into today's meeting. As always, anything that we discuss here is only for education, maybe entertainment. Nothing is financial, tax, or investment advice. So do your own due diligence. I mean, follow anyone you want to, but just don't invest based on what the other person is doing. Right? It's investing is very personal. It's more personal than financial. So focus on what works for you. All right, with that, let's get into today's. As always, start from the top, start from the market. What happened in the market, right? If you look at a weekly performance of the market, Nvidia is back up, kind of trying to regain some of the ground that Nvidia had lost at the start of this year. So Nvidia was up 8%. Other big ones, and talk of Mac 7, Microsoft down for the week, Apple down. Apple has been bouncing, back and forth. Amazon is down after earnings. Not sure why, but it is what it is. Alphabet, Google is down almost 9%. Market doesn't like the earnings when you come and talk about, my cloud revenue is this, and we're gonna spend so much money on CapEx. Market punishes, and Tesla is down almost 10.62%. So I don't even know why Tesla was up after earnings. We looked at Tesla earnings, and stock was all running based on the fuel from of our future dreams, robo taxis and whatnot. But who cares? Now at least this week the stock has retreated back. Also, GM and Ford are not faring any better. Basically, all auto companies, because of the tariffs. We're gonna implement tariffs on our southern border, where GM manufactures cars, Ford, etc., plus tariff on steel, which is a big ingredient for any of these car manufacturers. I think tariff worries are bringing some of these stuff down. But who cares for what happens in a week? Let's look at year to date. The tech year to date is not that great a picture anyway. So Apple is down 9%. Nvidia is still down after this weekly, catch up. Nvidia is still down almost 3%. Only one bright spot of, I would say, the Mag 7 is Meta. We reviewed Meta's earnings last week. What amazing cash flow generator Meta has been. Right? And this was a company which was like given, and I think we talked about at that time saying, don't throw the baby with the bathwater. when in 2022, when every company is being scrutinized for the profitability and market was just not favoring any of the tech companies. Come on, there are some companies which still generate healthy cash flow. They still have a huge advertising market. And Meta was being priced as even less. Forget about all the metaverse, etc. Even if that thing didn't happen, it was being priced as less than what its advertising revenue would bring. So it was a great opportunity, right? What, 92? I think we picked up something close to 100. Yeah, you can't always time the bottom, that's fine. But now it's like up 700. It's like 7x in what, 2 years, right? Let's look at Meta. Yeah, because I think it was October or November when Meta was like near 90. So let's go back three or one day, 88. That was what, November 2022. So this is almost 9 times. Yeah, exactly. So or 8 times, say this as 90, so almost 8x in slightly two years. So well, that's what I mean. Stay the course, look at the companies, see what is market is doing. In a short term, market can be very volatile, and they try to price in minute by minute information, month by month information, or day to day information. And market doesn't, most of the time market doesn't look at, hey, let's move, let's expand our time horizon and see after a year or 2 years, right? So anyway, even till this year, it's been a pretty bright spot, 22%. I feel it's higher, but markets can continue to stay irrational. This is not the most irrational company. We will talk about one which I can't wrap my head around it. I've enjoyed my ride with that company. That company is up almost 11, 12 times into Alfred says PLT. Exactly. Right. But well, markets can stay irrational. And if you're making money in that irrational market, I won't complain. I'm not praying that Palantir should go down, but I can't wrap my head around is why Palantir is trading at where it is trading. So we will look at that. Remember hymns, it's crazy flying. Hood is getting into gambling. Yeah, I mean, with the new administration, everyone wants to try everything out. We don't have to go to Vegas anymore, guys. Vegas is coming on our mobile phone. I think Hood or even other brokerage, there is a like what do you call as binary options, right? Where you just pick up and you say, 1 or 0. There are only 2 outcomes, yes or no. Will the temperature be above this or lower than this? You pick, and then either you make money or lose money. So we don't have to go to Vegas. There's a lot of things now we can find in the stock market, and with little, the regulations gonna be even looser than what it has been. I expect a lot of other stuff coming in market, right? Uh, and why Hood? I mean, even if the ETFs look at like 2x NVIDIA leverage ETF, it's a single stock. Why do you even need an ETF for a single stock? And of course, after the SEC had changed the rule or they started approving single stock ETF, I think that change happened in 2021 or 2022. Only after that, we are seeing single stock ETFs are flooding the market. Not only just a single stock, is now we are seeing the leveraged ones, right? NVIDIA has the one where there's a lot of money in these leveraged ETFs. That is why NVIDIA stays very volatile, because not only the stock movement, but a lot of, when these leveraged ETFs funds, when they have to buy and sell NVIDIA, it just enhances the volatility in the stock. So if you are NVIDIA shareholders, brace for volatility. This is how the market is going to be. Hims, what is Hims doing? I think I saw Hims stock was up. I don't know about its business. I'm not still very keen on its business model. Um, look at the stock, like 25 to 46 in no time. What where we were 130 in from a February itself, it's up like 50%. Did they what did they find? Did they find some drug for immortality? Or is the GLP-1? I mean, I've not been tracking Hims after.
Hims started out as like male health, like baldness and stuff like that, and then
Yeah.
they're just expanding to everything now. So and it's all subscription based, no insurance. Like yeah,
Yeah, I know its business model. I had actually reviewed Hims. I mean, that time the stock was running up on the GLP-1 drugs because they can offer the GLP-1 drugs at a cheaper price. And of course, it's Hims, like you rightly said, its main USP is if you are, baldness or ED or the stuff that you don't want to discuss with a doctor, you're not comfortable discussing with, and then you know you want the medication to arrive in a nondescript envelope, etc., so that no one knows what the medication you're taking for. You're right, Jose. That's how they started. And then the GLP-1 is where it caught a lot of attention. But the GLP-1 is only because right now some of those drugs are under FDA, what they call as a shortage list. So these hymns, and there are others as well, they are legally, they can actually use the same compounds that are being used in these GLP-1
it's
drugs,
like a generic.
and then create a version. It's actually not called generic, it's called a compounding.
Sure, yeah, something.
Yeah, there is some specific name for
Different
it.
chemical, but does the same thing.
Yeah. So but those are not being, like, you can't call it as a FDA approved, right? So it's but once these drugs are out of the shortage list, these compounding pharmacies can no longer legally make it and sell
Sure.
it. So the whole thesis of GLP, when Hims was running on the gas of GLP-1, was, come on, you're only waiting for, you're just one decision out from disrupting your business if FDA removes this from a shortage list. So I don't know. I haven't not followed Hims or for last, I would say,
I'm,
6, 7 months.
I mean, I think like with these type of companies, the reason why it's having a lot of higher valuations is because it's a tech company, right? It's like a hybrid of health and tech. So that when the user base grows, even if the revenue doesn't grow, you know what I mean? It's the same way like SoFi is like, even though it's just a bank, because they had all these users, the stock like shot up. So it's like
Yeah.
you get the fintech or like the fin or health tech like premium on the stock price.
Yes, but I have seen enough of these health tech online pharmacy companies. 3, 4 years, they're all the darlings on the market. Then an FTC investigation will come in, or Justice Department investigate. I'm not saying that Hims is like that, but I've seen enough companies uh, as a what do you call it, flavor of the year will come in, make money in the stock market, and then will disappear, because essentially to for them to the business model itself, I'm not very comfortable with, because they make money. If you can sell more drugs, and then the doctor can prescribe more drugs, and then there's a different incentive from a doctor patient perspective, that event. So I generally tend to stay away unless I can find out what's the mode in it. And if it is only a telehealth, there are much bigger companies also. And so anyway, I'm not saying anything good or bad about Hims. Maybe I need to go back and see what additional stuff have they found. If it is only delivering the drugs at a cheaper price over internet, I don't think that's a business. There are other companies. I don't know what
Well,
more.
I think there's a the reason why I've used some of these services personally, and the reason why there's a lot of people that don't have full health insurance, right?
Yeah.
So like you don't need to have insurance. Like you literally just get a free doctor to subscribe to prescribe you these things. And I think like as health insurance gets more and more expensive and people the economics get worse and worse, like the user base is going to grow for people that need to get certain medications and don't want to go to a doctor or like sign up for health insurance. So I personally have used it before, so it's kind of like
No. So right. But what at least because I've seen a few of these, and the essential element in those companies is eventually disappearing is because they continue to pressure the doctor to meet more number of patients and also to prescribe the medications that if a doctor was independent, he or she may
oh,
not.
for sure. Yeah, it's like
So
having
that's a
a la
yeah
carte pharmacist, right? You just go to the
yeah.
pharmacist and he just gives you whatever you want.
So anyway, but yeah, I think the stock has been doing good. I don't know how about this business. So maybe we can look at the next week on the HIMS as a business. 111.5 for Nvidia on Sunday night due during tariff news. All tops were discounted on Sunday evening. So if I just look at SPY, we are seeing like I don't even know what to call it. This is how generally you'll see in a money market fund. It rises, then it basically pays out the dividend, and then it falls down again. It rises. So I think this was what DeepSeek, and then this one was tariff, and this again Friday is a tariff. So a lot of stuff. I mean, with this administration, we don't have a dull day. Tariffs causes inflation. Jay is saying which affects Fed interest rates. Yeah. I mean, the standard. The another viewpoint is tariff did not cause inflation in the previous Trump regime, right? So again, depends on what you're doing on a tariff, how selectively or how extensive you're implementing tariff. I guess, I mean, I don't want to make any decisions, snap decision based on what's coming out of White House. So we'll see, eventually what happens. Again, if it's a great company, they'll figure out how to live in current tariff regime or how to live in lower or higher. It's only a transition period that is difficult. Right? We had the same stuff in a higher interest rates. The companies have survived in an interest rate of 10%, 17%, right, in 1980s. It's just that over the last 40 years, we become used to a lower interest rate. And when Fed increased the interest rate, suddenly in 2022, all hell broke loose because I don't know how to transition from 0 to now 4%. You take some time, then you figure out what needs to do, and good companies will figure it out. So, but if our investment horizon is only a year, that's where we get hurt most. If you have a good management, good company, they will figure it out. Hey, I got a tariff. I need to know how much cost can I cut. And then if I'm the leader, I have the majority of this, so maybe I will pass on some other cost to customers. We'll see. But the transition period, initial period will always be difficult for economy, for companies. You see around inflation, deflation, recession, whatnot. Year, 2 year later, things will normalize. I mean, that's a human ingenuity. Right? When push come to shove, we'll figure our way out. I mean, DeepSeek did it. Right? You don't want to give them a chips? Fine. We'll figure our way out, use a software, use another logic to do a better job. Yeah, so that we'll figure it out. I think the fact that Thiel has access to administration give more speculative fuel to PLTR for more government contracts. You can put any logic for PLTR, nothing justify where it is. But let me tell you other way around. If it is a more government contract, the valuation of Palantir should actually go down. Why the Palantir has started to go up over the last 3 years was earlier when it came IPO, I think 2021 or 22. I think it was 2021. Market didn't like Palantir too much because, hey, you are only dependent on government. And if you have one big customer, which is government, you don't have a pricing power. And if majority of your revenue is coming from government, then the street will value you as your government contractor, right? Booz Allen's of the world, Lockheed Martin's. And then you have a very few customers against which you don't have much of a say. So you don't get rich valuation. But Palantir started to pivot their business model from a government to commercial, and that's where I got interested. Say, okay, now if you can still use your, Gotham, that's what their software which they procure, built for government. They created Foundry and then AIP. I'm like, okay, now I'm interested because now you can sell to commercial enterprises. Now you can sell to hundreds and thousands of tens of thousands of customers, right? But if you're only government, how many governments you can, are there? We have 195 countries, guys, not thousands of countries. And then you don't have a pricing power. And then that's why the street doesn't value much if you're only a government contractor. So it's only that they have been started to increase their commercial revenue. And every quarter, I do look at, okay, what's happening on their commercial side? Because that's my thesis of, was my thesis and still is my thesis on investing in Palantir is you guys need to continue increase the share of how much revenue you're getting for a commercial, because that's where you have your pricing power. And the market is huge. But even with that, I can't justify where it is trading today. Right? So we'll come to that. We'll look at the Palantir again. But it's a hugely popular stock among retail. I mean, maybe I have a little bit of contribution to it. I mean, I'm a retail investor, and being in Palantir for a few years. How about Palantir versus BBAI versus SoundHound? Which is BBAI? Morris, which is this company? I don't think I've come across this sticker before. Big Bear AI. What do they do? I've not heard of, never looked at this company, BBAI. I mean, of course, it's got a name AI. If that's the case, then I will basically run away from this company. Oh, come on, $41 million of revenue is too small. Pump and dump. Let's ride the wave of AI, and that's all it's doing. And it's been diluting you like hell. So it's a promoter's grift, man. It's a AI grift. I don't even know what this company does. So let's look at artificial intelligence power decision intelligence solution. That oh my God. Anyway, so sorry, I'm not at all interested in this. Basically, it's a service company, implementing technology solutions. What more do they have? They have nothing. But they got an AI in their ticker and think that's what is driving. So I'm not gonna touch this. Horrible financials. If you are a AI and the tech company, do you know the margins of the tech companies? Your gross margin should be like 80%, right? What's their gross margin? Looking at 26%. Operating margin negative. Yeah, not for me. I'm not gonna waste my time on this one. BBA shot up from 1 to 9.9.5. They also work with Palantir. There will be many companies that will be 10x or 50x. Only thing is you need to figure out when you get off that before it crashes. So I am not in that business. From GDP, institutional investors are primary drivers of Palantir recent growth stock due to their huge investments, their large investment and long-term confidence in the company business model. So if you've been long enough in the market, you will see that the price is driving the narrative. Price drives the narrative. So now because the stock price is, Palantir stock price has been up like 8 times in 2 years, everyone now will talk about how great the company is. I'm not saying it's a bad company. I still love the business of Palantir. Guys, don't get me wrong. I love Palantir business. I've been watching this company. We started building position at $6, $7. I also had bought it after its IPO at $26 because I loved the business. And I went big on it when it was $7, $8, $10, etc. Right? But $117, I'm not positive on the stock price, but market can give whatever they want to give. That's okay. I'm positive on its business. All I'm trying to do is separate out the business from the stock price. But in the long term, stock price will reflect what the business is worth. In a short term, the things can diverge. Nikola filed for bankruptcy yesterday. That stock was what, $90 at some point of a time. There are many stocks that were the darlings of the stock market, but sometimes the stock price get detached with the business, and it happens on the both the directions. 2022, a lot of great companies stock price were punished, even though the business was still okay, because the sentiments were in the market were bad. Hey, you're a tech company. The sentiments were against the tech companies. So right now, anything you attach to AI, and Palantir is doing a good job in AIP, using their AIP, but I still don't see them as scalable as a software company. It's still they do call themselves as a software company. I mean, just the number shows, right? Okay, so let's talk about Palantir itself. So number shows, right? I don't have to create. Look at their operating margins. Okay, let's go to quarterly. It's 15%. It's a low teen operating margin business. That means it's not as scalable as a software company as you think. Probably they have to use a lot of consultants. They have to put in a lot of human manpower, which you just can't copy and paste. Right? If it is purely software, what cost to deliver another license of Office 365? What's the cost of delivering another license for 365? Zero. Nowadays, we don't have to ship CDs. Otherwise, there is the cost of burning the CD. Right? So that is why if you look at majority of the so-called software companies, look at their margin profile.
Sorry, you told about something about the operating margin, right? What is that?
We'll talk about it. So look at the gross margins of Microsoft, 70%, operating margin 45%. So gross margin is your revenue, and then you subtract the cost of that you've incurred to sell the goods. That the cost means the cost that get into producing that good. Then the operating margin comes after you have subtracted your HR cost, your R&D, your employee expenses, your sales and marketing, everything else, right? So look at the margin profile of these big tech companies. These are the tech companies. These are the real tech companies, scalable business model. If they have to increase their revenue by 100K, they don't have to increase their cost by 80K. Right? Operating margin in 40s, and we are talking about a company which is generating hundreds of billions of dollars in revenue. It's not a small company. It's like $2 trillion plus company. Or is it, what did it anytime hit 3? Anyway, I like this margin. I can't say the same about Palantir. I mean, bullish about business, but it's not as great as what they are talking to be. It has to show up in your numbers, guys. So I agree, whatever institution or whichever fund house is saying this. Are we pricing in all the growth of future in today's stock price? That's a question you need to ask yourself. I don't like this margin. And profit margin is higher because all the net profit income that they're earning, they're earning more income in the interest because they are holding whatever $5 billion, $6 billion. They're keeping that in a bank and making 4%. When the Fed starts to reduce the interest rate, that income is gone. Anyway, anyone can earn that income. You don't need Peter Thiel for it or Alex Scott for it. Right? That's nothing to do with your business. So I don't want to give you any credit that your net profit you made so much of a net income. Tell me how much money are you making from your business? Operating income, if I look at it, okay, this is September, right? So, okay, so I think S&P Global has the latest one. So Q4, they did 287, which is great, right? 36% growth. I mean, we'll review Palantir, so I'm not going to go into the details, but look at the thing that operating income is only $11 million. They're getting some interest income, $54 million, and some other non-operating income, which is boosting their overall net income to 79. But what are you doing from your core business? Everything else is external. Let's say if I have an investment in, I don't know, I mean, Palantir does have investment. I don't know if they have equity investment in private companies or public companies. But when I'm reviewing another one, okay, so we wanted to go over there anyway. Look at Uber. I'm not going to go super bullish on Uber because their net income is now $6 billion, which is like up 400%. I'm going to want to look at what caused it. You know, this is the more than $1 billion. Sorry, there was another one. They got to, they have almost 1 point. Anyway, when I'm going to look at the operating income is only 1.2 billion. They got some tax, so P&L, not all income is created equal. So you need to know what is driving that net income. Right? I'm bullish about Palantir business. I'm not bullish. I'm not that keen on Palantir stock right now. That doesn't mean I'm going to sell all my stock. I'm still holding a portion of it. I mean, I started selling it 45, 60. I have a covered call at 95, which I now rolled out. Probably I'm going to put another covered call at 130. Right? But
So what do you think it is
right
the
now it's
cause
a
of this
gambling.
boom?
Sorry, go ahead.
What do you think which caused the boom of the Palantir stock? Like what are the functionalities of the company or the market analysis which made this Palantir stock spiked out?
Folks, those who think that they missed on Tesla are not jumping on Palantir. You see, in a short term, if you come and say, I want to pay for $100, I think I took an example last week, right? I have a $20 bill. I put in an envelope and I say, okay, how much you're willing to pay? So if someone stands up and say, I'm going to pay $25 because someone's got a free money, they got an inheritance, and they just want to win the game and say, I'm going to pay $25. Is it really worth $25? No, but the stock price will immediately show that the $20 an envelope with the $20 in it has been now trading at 25. That's what's happening with Palantir. People are getting into FOMO. I mean, Alfred said rightly, right? Those who missed out early and are saying, oh, maybe this is the next Tesla. And don't get me wrong, the stock can continue to go high because you don't know. But I still own Palantir, but I'm owning it to, I don't go to Vegas. I don't know how to play poker or whatever, baccarat. But this is my Vegas stuff. Palantir holding what I'm holding in my portfolio, it scratches my gambling itch. And so I'm gonna position size it accordingly because right now I'm gambling in Palantir. So be careful. And these things happen all the time in the stock market. You will find some companies that are just narrative or story driven company, which is what right now Palantir is. It's a great business. It's a great business. I'm not too enthusiastic about its stock price.
So I have a question. So you do a lot of like long fundamental investing, right? Longer term,
Yeah.
and then you generate extra income with options and stuff like that. How
Yeah.
do you ever trim the position? Like, how do you know when to take profit? Like, kind of like in these situations, or what? Did you feel like
Right.
it, or if the business changes?
Yeah, business changes. I think there was one session where I talked about the overall process of investing, which is how to open a position. So basically, I consider investing as a marriage, right? First, you start dating the company. That is when I start to review, build my thesis around it. Then you marry it, you start building your position in it. Then third one is how do I stay married is, I reduce the cost of friction in the marriage, which is where I keep selling option, generate income, reduce the cost basis. Eventually, it's a life, stuff happens, divorces happen all the time. So there are times when you will say, I need to sell the stock. There are many reasons on which I sell the stock. Stock price is not the reason. Maybe, I bought a stock for a specific purpose. Purpose was to fund my trip to Bahamas. Now it's a time to take trip to Bahamas, or maybe buy a car.
Gotcha.
Right? There was a goal associated with it. The business my thesis is wrong. I thought this was XYZ company, the business turned out to be something else. Right? I'll sell it. Right? Or there is no second act left, remaining. That's the most difficult decision. When the company is doing okay, but there is nothing new in the future that I can see about the company. Right? That's another reason to sell. So there are a list of reasons on which I'll sell. Stock price going down is not one of the reasons.
Or not going down, but like going too high, like overvalued.
One of the reasons is if it has become egregiously expensive.
You take some profits, right? Like
So then I'm like, guys, now I'm trying to gamble it. So I don't sell it if it is expensive, because you can never find a great companies cheap. If you start looking at PE or forward PE, etc., you'll never find a good companies.
so you don't do
at a
that.
value.
You don't sell if it's too overvalued. You just let it, if you feel like company's good, just let it run.
Yeah, but in 2021, I learned my lesson that sometimes it can become egregiously expensive. So when I'm talking about Palantir, I feel it is egregiously expensive, and who knows that it could still be more egregiously expensive. So I'm not adding anything to Palantir. I'm holding my shares because that's scratching my gambling itch. And I'm very well aware that now what I'm doing with this holding in my portfolio, it's a gambling. So if its stock goes down, I shouldn't be looking around and say, why did the stock go down? What did the company do? No, dude, I am aware I'm gambling it, and gamble. Sometimes you win, sometimes you lose.
And what's your like bear market procedure? Like, do you just buy puts like hedges on it, or do you
I don't. I always have
just
hedges on. So I always have hedges on. I just maintain my overall portfolio delta.
so you don't really change anything if you feel like there's a bear market coming?
No, bear market is a good time for shopping.
That's it. Okay.
Right. So let me just bring up.
Vivek.
Yeah.
Paul Krugman says this is like the .com ages. What do you think? I have the article if you later on, but he says it's like .com before 2000.
Yeah. So the what I can't. I mean, no one knows that it's a bubble until it's burst, right? But the question is it 1999 or 1995? No one knows. But the mania is kind of a .com, but maybe if we are still in 1996, this might still go on for another 2 years. Who knows? So, like someone asked, like hedging. So this is, let's say, let me share this with you guys. I just took a screenshot of, where's my document? Okay, let me just paste it here. Anyway. These are my open trades still for February expiration, right? So if we look at this color, what I call teal color, these are the hedging trades. And look at the amount of a premium that is still open, and majority is open on the hedging ones. So I do have hedges on portfolio, and I tweak my hedges based on, let's say, right now, I'm not adding any more positive delta option trades to my portfolio. Right? So over the time, you'll figure out what's your delta number that you're comfortable with and work with it. So I keep an eye on that, and I'll basically sell call against SPX, SPY, QQQs, or covered calls against my against my stock to just manage my deltas. And what I'm actually a little delayed because of the earning seasons, the 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 theta decay has been very slow. So I still have a lot of trades open for February. Gosh, we are only 2 weeks out for February expiration. I should be closing all this, but because of earning season, the theta hasn't decayed. All right. All right. So let's continue. Anything else? I mean, I would rather have this discussion. That's much more interesting. Anything that helps you.
I mean, I'm just curious about your overall macro view on what's the rest of the year looks like.
Doesn't really matter. The great investors, they don't pay any attention to macro. I do bring about macro because a lot of people want to know what happens, but I really don't care. And I have no insight into what's gonna happen. So I know that's not the answer that you're looking for, but I'm being truthful. I want to build my portfolio that I can survive in any kind of a macro world, whether it's COVID, whether it's 2021 exuberance. You build your portfolio based on you can survive any markets. And Howard Marks says, right, if you want to spend time on something, you should only spend time on something that makes a difference and is knowable. Macro makes a difference, but it is unknowable. I don't care what analysts come and talk about it, what economists come and talk about it. Economists, that's why they are not in the stock market, because it's all theory. Macro is impactful, but it is unknowable. If there's things which are knowable, which that this is what's called, will happen, but they don't impact your portfolio, don't waste your time on it. Macro is the same stuff. It impacts, but it is unknowable. So why waste time on it? So I have no view on what's going to happen. Yeah.
Okay. Yeah, no, because I trade a little bit shorter term than the way you're doing it. So I'm curious.
Yeah, I mean, the stocks that I hold my idea is hopefully I don't have to divorce the stocks. All right, but since we looked at macro, yeah, economy is doing okay, man. This is nothing bad. Consumer is continue showing the sign of strength. We have 70% of our GDP is consumer spending, and consumption grew by 4.2%. We talk of inflation. Come on, us Americans, no one can no one can stop us from spending. We continue to spend, right? And our consumption grew by 4.2%, which is well above the long-term averages. The US has always been a nation of shoppers. And after pandemic, now we are having a revenge shopping. And, we love to spend. So as long as consumers continue to spend, the US companies continue to good. Our economy does good. This was a little older chart, not from this week, but online retail and social media is fueling compulsive buying in 12 to 43-year-old. Right? That's why I'm bullish on Amazon. Yeah, Amazon stock was punished because maybe the cloud grew only 19%, whereas others are going at faster rate. And they committed $105 billion of capex. Yeah, sure. Are we will start spending on Amazon.com? No. Will companies still not use AWS? No. They will still use it. Stretch this out for 4 years, 5 years. I'm still bullish on Amazon. And not the consumer ones. Look at the manufacturing sector. Now, this is the recent chart. It is now basically if it is above 50 means it's an expansion. Below 50, it's a contraction. Now we are seeing the manufacturing sector is now entering back into expansion category. Now, tariff, we'll talk about that. That could drive it in the opposite direction. But right now, this is a positive sign for economy. And corporates continue to deliver the earnings growth. And looking at a Russell 1000 value as well as growth ones, they continue to deliver growth. I think the expectation is in 2025, we're going to have maybe 10 to 15% growth in the earnings. In stock market, is the stock price, the value of a stock price, earnings growth. If you go from a value perspective, how do you want to value your stock? It's based on your earnings growth, right? One of the factors is earnings growth. And if you continue to grow your earnings, your value for a business will continue to grow. And 2/3 of the companies have already reported results, and this is related to SPY 500. 77%, 3/4 of them have actually exceeded the expectations. So I think companies are doing fine, economy is doing fine. Macro level, yeah, tariff. That's in the future. We don't know what's the impact will gonna happen or not happen. But from a company's business perspective, Q4 pretty good so far. I don't have nothing to complain about it. Labor market is healthy, right? The total jobs came in at 143. It is currently below expectations, but we also revised the numbers of the last 2 months, so probably will revise this as well. But unemployment rate fell to 4%. It's below the expectation of 4.1%. And before you tell him, start charging, say, oh, no, there's a lot of layoffs happening in a particular sector. I know Meta on Friday, they sent an email to their employees saying, listing of the criteria, they're gonna, on which they'll fire people on Monday. Come on. Why you have to spoil the weekend of your employees? Once you receive such an email, you'll have, dude, will I have a job on Monday or not? Anyway, Salesforce fired 10%? There's some percent at all levels, from a software engineer to the director. Workdays did a layoff. So yeah, but that is a particular sector. Overall on economy side, unemployment is at 4%, which is way below the long-term average of 5.7%. Right? Not only that the labor market is strong, the wage growth is also better. Maybe time to switch. Move away from tech. You don't have a bargaining power in tech because they're going to have an AI engineer bot which will do your work. Sorry, I'm just generalizing it. There are other areas where the wage is growing. Right? So average wage growth outpaced inflation last year, and still continue to see the gap, which is great. So it means consumers have more money in real terms, not in nominal terms, in real terms, accounting for inflation. So then we will buy. Consumers will spend. So that's a long-term side. What's the issue? Red flags is tariffs. And with this administration, we don't know what the tariffs will do. First of all, whether we will have tariffs or not. What's the extent of the tariffs? Which countries? When are they going to be? Everything is up in air. We have no idea. There is an announcement that tariffs is going to start from tomorrow morning, and then morning there is an announcement, hey, we are moving it out by 30 days. On one side, you hear, oh, we're going to have a 20%, and two hours later, oh, no, it will be only 10%. So I just can't base, you can't base your investment thesis on something that we don't even know. But this is a red flag. And that's why the market, every time there is and I think this Friday, it was because of Trump was meeting Japanese prime minister, and he reiterated that we're gonna have reciprocal tariffs. And Trump, I think in its nature, he is tariff pro person. He wants US to earn through tariff. So now, but the question, maybe the other people who are advising him, what do they say? Does he listen to them, not listen to them? Again, there's so much of an uncertainty that rather than me trying to figure out the impact of tariff and what will happen, I would rather focus on, because I own this company, is this a good business to own? Am I trying to build a house made of straws or bricks? I know we don't build house of bricks anymore, but that's the strongest one, right? If I'm building a house of straws and then the tariff comes and then the house is blown away, don't blame the tariffs. That's what mistake we did as an investor. We started blaming Fed is increasing the interest rates and all my non-profitable, zero negative operating margin companies are now down 80%. That's not Fed increasing tariffs. I had built my house of straw, assuming that everything is going to be rosy. And one day it rained, or maybe forget rain. One day we had a high-speed winds and my house blew up. And now I'm blaming the wind. No, you blame that you built a house with the straws. So rather than me trying to figure out what's tariff gonna do or what the macro is gonna do, I would rather focus on what kind of companies do I own. Sure, I have my gambling itch, I'll scratch. I have a growth portfolio. I have a moon rocket shape or moonshot portfolio, which is built of straws. I think some of them are actually built of paper, not even straws. They'll just crumble. House of cards, right? A little bit shake it, they'll just crumble. And I know that. And you have to be aware of that. And then you make sure that's the small percent of your portfolio. That's not 50% of your portfolio. The problem is when such companies become 50% of your portfolio. So if there will be tariffs across the goods, we don't know what kind of goods will be tariff. Then it could spike up inflation. Then that might impact some Fed decision on rate cut or not. But I don't even know how much to now depend on Fed rate cut, because Fed cuts the rate, mortgage rates went higher. Last September, Fed did a 50 basis point cut. And since that September, mortgage rates are up 100 basis points because that's not controlled by Fed. Which rates Fed control? Let me ask a question.
Overnight lending.
Overnight lending. You buy from Fed. Have you ever tried to buy from Fed? You and I? No way. Whatever Fed rates are set, we don't even participate in. We can't even participate in it. Right? But the general idea is if Fed is changing the interest rates, your cost of borrowing for the big banks become higher, or then they will try to price their own products, which are loans, mortgages are high, right? That's why it is kind of a correlated, but it is not exactly the same. And this is the lesson that now we have learned is, damn, Fed has reduced their Fed rate and the mortgage are still gone higher.
Yeah, but isn't the fact that the rates aren't following the Fed a sign that the economy is a little shaky? Like the people don't trust, the market's not trusting. You know what I mean? The lower rates, like they don't want to they don't want to. They'd rather buy the longer duration.
Yeah, so market is from the government perspective, so the mortgage rates are generally more correlated and driven by your 10-year bonds. Right? So 10-year bond rates have not come down because market's still thinking, is the US government as reliable as what it used to be? Which I don't think it is. But let's say if the DOGE or DOGE, whatever you want to call it, Department of Government Efficiency, if they figure out and are given and they are able to reduce our deficit, the fiscal deficit, and tariffs are trying to reduce the trade deficit. And if we are able to cut down $1 trillion spending, become more rational in spend. Right now we are spending like a drunken sailor, right? Government is spending like a drunken sailor. We don't have any money. We are what now? 36, $37 trillion in debt. So the rest of the government is saying, why should I buy government debt from US anymore if they're not responsible? I mean, you will never marry your kid to a person who, like, say, earn $100 and spend $140. Will never do that. Well, that's the US government. Yeah, I think, but let's say if the Doge initiative make changes and the market does think that no, US government is becoming responsible, and if I think one of the agencies they have brought down, I think two agents out of three, two rating agencies have brought down our rating from AAA. If they notch up the rating, then the 10-year will go down, and yeah, then the markets might go even further up. So there are so many things happening at a macro level, which is unknowable. We don't know how the things will turn out to be. Anyway, so that's on the macro. SPY is up close to 2.5%, 2.6%, right? Nothing to complain about. We are what, 1 month-ish, like 5 weeks into the year, right? So pretty good. Even though it's been a volatile days, some days are more volatile than others, but I would say still pretty good market. There is some question. Jay is saying, okay, so I think Asif has asked, do you think can AI be deflationary to software margins in the long term, 5 to 10 years? In other words, how long software base can enjoy 60% margins? I think it will be, the margins even go higher. I think it's going to be other way around. Both for the software as well as for the other companies, the companies that are implementing this software is going to be higher for both. Now, why for the software companies? Look at what Zuckerberg said in his earnings report. What did he say? That we're going to build an AI engineer bot or AI engineer model, which will be able to do the work of a middle level software engineer. What's the biggest expense for a software company? The expensive software engineers. We don't produce enough of them. That's why we have these H-1B programs to get folks from others, and that's why the software engineers is a highly paid job still, as compared to not don't start comparing between I'm a X type of software engineer and ML and AI engineers are getting paid more, but overall software engineering as a profession is a highly paid profession. Now, if you can replace that big chunk of your R&D cost with an AI engineering model, what does that do to your margins? It's going to explode. So I think the margins of the software companies will go higher in the long term. And the companies that are utilizing these AI models, let's say if a manufacturing company implements it, their margins will also go higher. They'll be able to cut down the flap. They'll be able to rationalize their operation. They'll be able to make decisions quicker with a fewer folks. So overall, AI is going to be great for economy. Now, we will always have this short term wherein some of the software companies would have invested billions of dollars in building these models. Now, it might take time for them to recoup that cost. But long term, new tech in long term is always deflationary and for consumers, and brings increases the margins of the company. That's my thought. In 1980s, 1970s, the margins of the companies, the biggest companies on our stock exchanges were 10%. But we had oil companies, we had a GE, the bigger one, I think except IBM. There are all the other companies, right? Low margin businesses. Now we have a much higher margin business. Google is like one of the best business. Now it got disrupted. I think that it got disrupted. We'll see whether it has been or has not been, but never seen such a margin business before. And Jay says, once developed software is very high margin. Exactly. Yeah. The cost of the gross margin on any software business, when it purely the software and not the cost of hosting and all that, it's zero. Control C, Control V, copy paste. You produce another copy of software, right? Ramesh said sold Google and Amazon puts by discounted offer signed. That's great. What areas the wage is growing? I think it will be services and maybe manufacturing. Because if you have to bring back the manufacturing in US, you have to pay them higher. But again, I've not looked into it. Okay, so Jose has already mentioned healthcare, trades, finance, retail. Sorry. Cool. All right, so even though the SPY is up 2.6%, this is an interesting comparison that I did, right? Max 7 is not helping. Only 2 companies out of Max 7 is up year to date. Nvidia is down, Tesla is down, Apple, Microsoft, Alphabet, they all are down year to date. It's only Meta and Amazon. So why is SPY up so much? Okay, little contribution from Meta, but that won't explain the whole 2.6%. Finally, it is good to see some divergence in market. Other sectors of the economy or the stocks. Look, SPY only tells you about stock price. The stocks of other 493 are starting to recover. People are figuring out, maybe let's move some money into other, industrials, materials, and other stuff. So looking at the sector wise, year to date, financials is up like 7%. Communication services is being helped by Meta, because that Meta comes under communication services. Materials, industrials, consumer staples. The tech is actually, overall tech is negative. This has been a great performer over a longer period of time, but this year, in IT tech is negative for the year, but it's good to see that money is moving to other sectors also. Not everything is dependent on QQQ. Right? Hey, there are other companies as well, 493 companies. So good to see those. All right. Fear and greed index, because of tariffs, it switched from, I think last week it was 40-ish or yeah, it was 40, it's still almost the same. So it's in a fear. I will, start opening my purse when it's getting close to, like, say, less than 30. Start adding some more, companies that I want to buy, and then go on a shopping when it is an extreme fear. That's the time to actually go and spend like US consumers spend, but spend in the stock market. Okay. So that's at a high level. Is what we are witnessing in AI, is this the first time? I mean, if you talk anyone like, it's going to change the world. It will. AI will change the world. And I'm all for it. It is already disrupting a lot of the traditional way of working, the traditional workers. And always happen. New tech will come in. Some of the jobs will be lost. They will never come back. After electricity came in, the job of no more candle lighters, right? We don't need them anymore. Cars came in, horse carriage drivers have disappeared, right? Except maybe some places and entertainment. We don't need them anymore. So these things change lives. These are life-changing technology. And the question that we investor want to know is it an investing changing thesis? So I want to look at, starting at 1820, this is nothing new. So I don't know who said this, but one of was it Charlie Munger? Was it Howard Marks? Someone said it. For those who don't study history, everything is unprecedented. And the more I spend time in the market, more I realize that it's nothing new. Like behavior, instruments will change, but overall, we as a human always behave the same way. Now this, I'm looking at 1820s. Right? Transport was a dominant class of investable securities. Canals, docks, bridges, roadmaps made more than half of the stock market universe in 1825. Today, it's tech. right? Big tech. Most important sectors are gas and water utilities. Boom. Everyone is willing to pay whatever they want to pay. Then the bubble deflates. Happens all the time. The canals, heyday of canals. I think what I want you to focus on this one. Any technology, sorry, it's got my notations in it. Any technology that necessitates heavy capital expenditure and requires returns to be earned over an extended period is always going to be a high risk undertaking unless there is some form of protection against competition, which is moat. So when I look at all the spending that is going into by AI companies, I'm like, what moat are you building? If LLMs can be out, it can be open sourced, right? And if right now, I think the only moat that the biggest moat that these AI companies have, let's say OpenAI, etc., is a capital. Gosh, it needs billions of dollars of investment. So generally, I don't like high capital companies but in some businesses, the capital itself become a source of a moat. What DeepSeek did 2 weeks ago was it kind of created a fissure in that moat. It created a crack in that moat. And that's why companies sold off 20%. Some companies were down 25% suddenly, because that's the only moat which currently these AI companies have, is that we can outspend everyone else. But what? And this is a question, because there are a lot of questions around the DeepSeek also. But what? Is there a universe in which you don't have to spend so much billions of dollars? Then what happens? So you've got to be aware of that. Yeah. A massive amount of capital expenditure were committed without any guarantee of new technology would enjoy the sufficiently long period of dominance in which to earn back that returns, right? Right now, similar thing we are witnessing for airlines. We don't know when we'll get the fruit, whether we will get the fruit, how much we're gonna get it. I mean, there was a question, right? There will be productivity gain. How much? I don't know.
Vivek,
Yeah.
US stuff costs too much. R&D, you just buy stuff at the store. Things cost too much. You don't get your value. I mean, is your life better off? Well, of course your life is better off, but is life better off 4 years ago?
No. So
Yes,
every technology does a promise. Let's say when computers came in, the promise one, oh, come on, you'll have a lot of free time for yourself. You don't have to do a drudgery of computing by calculators. We got a computing, right? Tell me those who are working. Are you working less hours? No. Then came in social media and all that. Hey, you have stuff, you can do a lot of stuff on mobile, and you don't really have to sit in front of a computer and free up this time. No, we always find there'll be always additional amount of work that will happen. So the promise of technology, I mean, it does help in one area, but then the whole promise of living, yeah, you can sit on a beach and sip pina colada because now you got a new tech. That has never materialized. That has never materialized. Right? Uh, Jaspal is saying, Jaspal, is this your first time in this meeting?
Yes, it's my first time.
All right, welcome.
Thanks.
Yeah. He's saying the moat is the infrastructure. Yeah, I mean, you build the infrastructure because you're spending so much money, right? Billions of dollars. We'll look at it. All the big tech companies, they committed close to 300 billions of dollars in their capex to build the AI infrastructure, which is essentially buying Blackwell GPUs, building these data centers, and the commitment towards buying that energy at a cost of 4 to 10 times what a normal consumer will pay. But again, I think that's again comes down to the fact that because we can outspend on that infrastructure.
Right. Yeah. So I just wanted to kind of put that out there because I think the moats is not the LLM models. itself. It's the infrastructure. Now, the big question is that much infrastructure going to be needed if the LLM models become more efficient? And so like DeepSeek, the way it was, okay, it's such an efficient model which doesn't really need these data centers. And so that could kind of throw things off. But otherwise, there are not that many companies that can spend that much to set up the data centers.
True, true. I think that's why it disrupted the hey, and when the DeepSeek news came out, the biggest gainer of the DeepSeek fiasco was Apple. Okay, I'll have to mute Sam. Because now they figured out, hey, if you can run some of these models at a, you don't really need this like GPUs, and if it can be run on with a lower power, maybe we see a future when every cell phone will have those models running, and that's why the Apple stock went up high because hey, you have the biggest distribution. Asif saying inference infra is going to be 10 to 10x larger than training infra as per experts. Yeah, so I think that's I agree. This is because of the demand. I mean, training, you've done your training once, right? And then on inference, based on the demand, you'll continue to create and scale up your infrastructure. And if AI is going to be on every phone, we're going to hit, all these servers every time we touch anything on the phone. Yeah, so I agree that the inference is going to be higher. My biggest question is it going to be, will it provide a return to investors or not? Okay, so let's continue on this bubble stuff. So first we had these the canals and all that, then we came railways, right? The early railways were successful commercial ventures, but their share prices were soon raised to unrealistic levels by the inflated optimism of investors. He's not talking about the companies, they're talking about the investors. So some of these AI companies could become a successful commercial venture, but guys, I'm a little bit selfish. I'm an investor. The question is, am I going to make my money or not? Right? I'll do a little bit of comparison on the NASDAQ 1999 to 2000. We all know about it. When a capital is freely available, competition can arise even when there is no apparent sustainable commercial case for it. We saw during 2021, one business model, we have 10 startups on that one, right? And then we know how it ended at the moment Fed start to increase the interest rates. So this is a chart for 1840s. Now we move from 1820s. So canals got disrupted by railways, right? And then railways has its own bubble because now we think that's the best thing to happen to the world. No one can disrupt railways. Of course, it changed the lives. But every technology that is life-changing goes through its bubble phase. And that's what happened with the railways as well. And what happened is in 1845, Bank of England, that was the most, I would say, powerful bank in the world. Now it's at number 2, from 2.5 to 3%, boom. All the speculations was the stock fell down. Almost without exception, all periods of speculative excesses in financial markets are assisted by easy money. We have lived through this in recent times as well. So this is what happened. Almost lowest rate, highest share prices, right? Railways, because the railways were the darlings of 1840s. You start to increase the interest rate, share prices go down. Conclusion. Bubble of 1840 deflated under the weight of overheated expectations, right? 50 years that followed, investment in railways were not rewarding, either in absolute or in relative terms. Economics of the railways businesses remained solid, but the investment did not recover. So if you're telling me AI is going to change the world, dude, I agree. And I'm 100% for it. What worries me as an investor is, even though these businesses are great, these are commercially successful business, they will change the world. Will I be able to recover my investment or not? Yeah, that depends on at what price do I buy this into this investment? I bought a Palantir at $7. We talked about it in January 2023. As I think it's been like baby thrown along with the bathwater. I can't say the same stuff about it anymore, even though the business is continuing to become better. If I buy Palantir today, whatever 115 or so, I'll be worried about my investment recovery. Even though the Palantir will become a better business, will change the companies, right? Too much is riding on optimism at this price. Always happen. You inflate the bubble, deflate the bubbles, right? When companies are funded on expectation instantaneous stock market returns, huge amounts of capital are wasted on non-economic projects. Many companies end in liquidation. Although the promoters usually emerge with a positive returns, the technology itself succeed in delivering the results that we are forecasting. The average investor frequently struggles. So the promoters will make money, founders will make money, companies will change the world, the technology will deliver on its promise. Everything that we talked about, the technology will come true, and we still not make money. Right? Again, I don't know. Where are we on this AI stuff? But to me, this does sound a little bubblicious. Only the price going high is not bubble. That's just a bull market. You can call it as a bull market, right? Price goes high in a bull market. There's something else that comes into the bubble, is where I think, was it Alfred mentioned? FOMO. You're seeing your neighbor getting rich and say, God, I gotta get onto this now. You have no idea what the stock market is. Or you have no idea what that company does. Right? In 2021, and forget about the retail investors. In 2021, there was an interview of a fund manager. And like very infamous interview. Hope he wishes that there was no internet, because now that videos will live forever. Coming talking about how he's bullish on Upstart. And then when the host asked him, what does this company do? He was just caught. And he had no idea. And then, oh, sorry, I can't hear you and all that stuff. He had no idea, but probably has seen the other fund managers just jumping on the bandwagon of Upstart or related companies in 2021. He wanted to get in. So that's why if you're listening to CNBC or Bloomberg or listening to fund managers, we have no idea what's the premise that they're coming from, who is pumping their bets. I mean, I think everyone will pump their bets. But you don't know what study they have done. That is why it is very important that if you're holding individual companies, you need to know about the companies. Otherwise, SPY is a great investment. Most of us who don't actually enjoy the labor of looking into the earnings should just hold ETF. No shame in that. Yes, this is a stock market. You don't have to, you're not being paid for your intellect. So don't try to be curious. I want to buy this individual companies because hey, I want to look different. But come on. You want to make money? Find out what's the easiest way. And no shame in just holding SPY or QQQ. So is Palantir in bubble? I think so. But that doesn't mean bubble is going to prick tomorrow. Am I going to buy Palantir at 110? No. Right? Am I still selling everything of my holding? No, that's my gambling. I'm using my gambling chips. I mean, I've already taken off all the money that I invested in, a lot more. It's a house money, so how do I care? But then you shouldn't be buying this Palantir saying, yeah, Vivek is still holding it, guys. No. But if someone calls me on CNBC, I'm not going to tell them saying I'm doing gambling with Palantir. I mean, if I can't, I'll probably tell them, but no one will say that. I'll figure out a reason. I think someone has talked about, right? That investors are great, their future is greater. You'll spin something up. Otherwise, CNBC won't call you again. So I'll spin something up to give you a reason why I'm holding Palantir. Inherently in my heart, I know It's a gambling. Right now I'm gambling. It's okay to gamble. It's legal, right? I'm not doing anything illegal. So if you're holding it or you want to buy it, understand what you are getting into. Asif says 15 years back, everyone had 4+ extra hours every day because of no snap. That is true, guys. That is true. Share of AI in our GDP is now up close to 6%. So basically, IT plus equipment and software spending, including data centers, etc., is now close to 6%. And this is another chart that compares the GDP, in a particular sector ratio stuff, right? So this one is close to 6%. Green is like data center structures, current AI boom. Telecom is orange, almost similar to that. Residential fixed investment, that's a housing boom. We know how it ended up. It's one of the highest on the tech side. But so is AI in bubble? Overall, is AI in bubble? What do you guys think? We looked at a particular company. Now we're looking at, is AI overall in bubble? I'm not sure. I don't know about you, but I'm not sure. Even if it is in bubble, I'm not sure it's going to prick tomorrow. So I'm not going to sell all my holdings. All thing is, maybe it is over expensive. Maybe I want to pick up the companies that have a story other than AI also, so that if this bubble pricks, at least my company doesn't go out of business completely. So I'm not interested in what of that big bear AI. That gives me vibes of Long Island Blockchain, the tea company that changed the name to blockchain in was it 2017 mania or 20? I think that was 2017 mania or around crypto. Like, I don't know what this big bear AI does. If it is only AI, and then the bubble will burst, and eventually it will burst. We don't know when, and then it will change the world. Right. So maybe I'll stay. I use my AI dollars to pick up the companies that have additional other businesses as well. Always happen. All the time. The names will be different. We had canals in 1820s. We had railways in 1840s. Maybe next week or sometimes later, I'll bring you another ones. Electricity. Right. It's fascinating to go through this history and look at what the heck. There's nothing new. Because we have not looked at the history, think, oh, come on, this never happened. This is the life-changing technology. Every time this happens, every time. Another case, hydrogen energy bubble. Plug stock went from 1500 to $2. Is the overall stock market in bubble? I don't think so. Maybe the AI is a little bit in bubble because there's a FOMO going on, like cases like Palantir. Now, if someone is want to get into Big Bear AI, why? Your friend bought the Big Bear at $1. Now it is what, $9? So you want to get into this BBAI. So then, yeah, then it is good. So my way of differentiating the bubble in just a bear market is sentiment. Overall stock market is in bull mode, probably not in bubble yet. I don't see people talking about generally I need to buy SPY. Right? That they want to say, oh gosh, let's put all our money in. Let's take a HELOC and invest in stock market. I heard that advice from some of my friends in 2021. I had some friends who actually taken some, and they shared, I can take a draw, on my credit card and invest in this XYZ company, because every company that is coming IPO or in SPAC in 2021 was like becoming double. Unfortunately, I had not read the book in 2021. But I don't see that kind of a vibe across the overall stock market yet. I do see that kind of behavior in some pockets, maybe in some individual stocks. If you are on a Twitter, you will see the screenshots of, "Oh, I made like 400%, 600%," and then someone like, maybe, then if we want to invest, we will always find a reason to justify. That's a beauty of our brain. But overall stock market, I don't think it is in bubble. It is probably bullish. Maybe the bull is bullish sentiment is extending, but again, me personally, you could have a different opinion. Me personally, I don't think that the overall stock market is in bubble. So if I were to start building positions, I'm not going to build more positions in Palantir. Maybe I'll build it in other sectors of the market. That's how I'm going to use this information to build my investing thesis. Aditya, what do you think about the current Indian stock market? I don't look at Indian stock market, so I have no idea. Only thing I know is my INDA position is down. Beyond that, I don't look into Indian stock market. Like IND hasn't worked, right? It's down 59 to what, 50? But I have no idea. I don't track Indian market. Overall stock market P is not too high. Again, I think so. Let's look at a Robert Schiller PE and everything else. I just need to bookmark this. Schiller PE is 36, 37.6. This is inflation adjusted. S&P 500 is 30. On a higher side, just Paul, like I said, it's not too high. It's not in a bubblicious. I don't think it's in bubblicious category yet. But
Right,
yeah,
right. That's why I put it there. This
yeah.
just supports your statement and argument that, yeah, I mean, the market does not appear to be really in a bubble because the PE ratio is on the higher side, but it's still somewhat reasonable.
Yeah. And
Vivek,
Yeah.
when was the last time that you remember it being in extreme fear where you could go on a shopping spree?
2022,
Okay.
we did have extreme fear. So let's go to, I think the CNN shows the history. Let's see timeline. How far does it go back? Okay. See, this is where we had the Japanese yen carry trade blew up for a week in August first week. Remember when Japan increased it by whatever 10 basis, 15 whatever. So US market sold off, and if you go back and look in, on that weekend, I said I bought shares because some of the companies that I hold in a portfolio has nothing to do with Japanese yen. They don't even have a big business in Japan, but the companies were sold off. That's what the market does. When we'll sell everything. Right? So that was an opportunity to pick some of those companies. And I did. Maybe I can go back to that, bring up that document where I'll share you, what did I buy or sell? And I'm pretty sure I took advantage of that. Right? So we did, I think 2022, we had it. This doesn't go, let's say, beyond 1 year, but you will get some pockets, some time when the market will give you an opportunity. You don't always have to chase. And that's why keeping some money on the sidelines in the cash is, this is where it will help you. When these opportunities present, and if you're not already heavily on the bullish side, then you can add some either bullish trade or, increase the delta of your portfolio.
November, December of 22 was when Kramer says, I don't know about actually he was talking bad about Nvidia.
Okay.
Remember?
So there is a Twitter handle on inverse Kramer, inverse Jim Kramer. I think that performs better than the Jim Kramer. Yeah, I mean, so watch Kramer for entertainment. Don't watch for taking investment advice. He'll flip his opinion before you can, change your clothes. He'll flip his opinion like that. So don't focus on him. I mean, he's being paid whatever, $5 million, $7 million. He has to bring in viewers. If he comes and says, I don't know what's happening to this, I don't know what will happen to the stock market, which is true, no one knows. How many viewers will tune into his show? Right? He has to tell you the stories. But that's all it is. It's the stories. And he can narrate the stories much better than everyone else. People join it.
People have to do their due diligence. It's their money. That's the bottom line.
It's your money, guys. He's not getting paid based on the veracity or based on how many of his predictions had come true. Pin his payment to that, then I will start listening to Jim Cramer. If he's being paid based on how many users watch Mad Money, that has nothing to do with how good the stock advice would be. You have to make it interesting, man. You have to make it interesting. And that's what he does. He does a very good job in what he's being paid for. And that's why he's been over there for many years. But you need to understand what he's being paid for. So these are the earnings next week. Nothing much on Monday for me. Okay, Tuesday morning we got Shopify. I'm gonna review Shopify. Interesting will be the super micro because there's a lot of stuff going around super micro. Fraud. Definitely it's not, again, super micro stock had run up whatever 10 times, right? And we actually looked at a super micro in meeting and I said, I can't justify 10% operating margin business. They are not AI, they are super micro, assembles the stuff. You need to work with the physical humans and the physical racks. You just can't download it. You have to spend that money. I just can't figure out why the stock is trading where it is trading. So, but I don't know where it is now. So, okay, so we got a Shopify. Nothing much here. It's a little light week for me. Maybe look at I want to look at Applovin, another interesting one. Maybe Robinhood. I don't own Robinhood. So, but if I have extra time, then nothing here. What we got? Airbnb. We look into it. Where did the Square go? Do we have a Square? A Block? I put it over there. There is a TTD on, but we don't have a Block in this week because I didn't have it on my listing on the board. I got TTD. Did I miss which? Like Trade Desk is what I'm gonna review. Oh, there it is, Trade Desk, small one. Yeah. Coinbase will tell us what's happening on the crypto side, right? Yeah, but I think at least less busy than the week that just went by. Yeah, Block, I will review it whenever they report the result. I own Block, and I think it's on my list to review it anyway. Jay says I did strangle on for Monday evenings. So that's a on semiconductor, right? Okay, on semi. Not looked into that company. So we got a Tower Semiconductor. Did Intel try to buy Tower sometime? So we got a lot of semiconductor companies. Applied Material, a lot of semi companies are reporting. But anyway, these are the earnings for the next week. Looking at the crypto side, Bitcoin investment bills by states. I think Utah is now 2 steps away. So it passed the House. Now the next step is Senate and then the governor. Don't know whether it'll happen or not. And then I think Maryland and Kentucky have joined the list of the states that we looked at last week to propose some kind of to propose a bill that will enable the state treasurer to consider Bitcoin as a viable investment vehicle, right? As of now, 22 states have bills. None of them have actually made into a law yet. Utah is, I think, the farthest along. It actually passed House and now waiting for 2 more approvals. But let's look at how the cons are doing overall. Okay, yeah, I mean, I just look at the biggest, like say top 10. Bitcoin has been range bound between 90 to, I would say, 105K. That's where it's been. Now we got a IBIT, so we can look at IBIT. Oops, what happened? Oh, yeah. After the initial jump from post earnings, not earnings, post election results, it's been pretty range bound, right? And that's been a great for me. I've been selling on IBIT, options around IBIT. So yeah, it's been just, we still have to see. I mean, David Sachs, who is a crypto and AI czar, I think he did a press conference. He got all the 4 agencies that have some or the other kind of a say in crypto, and the head of the agency is committed that they will work with him to develop a positive environment for companies that are active in this economy, right? So I'm still bullish about the overall aspects. But again, as you guys have heard me, this is a decade-long investment thesis. If you have a less than a decade investment, if you want a return less than a decade, find something else out, right? Micro strategy is now strategy. They removed the name micro because there's nothing small about it, right? They talk of $42 billion. Wherein if you want to listen into its earnings call, I've not finished it. I was driving, so I looked into the YouTube, but I don't even know why they talk about the software business anymore. Who cares about how your software business is doing, right? So the CFO, he spent some time talking about their AI and business analysis software. Who cares? Your valuation has nothing to do with your software business. You tell only is about a Bitcoin. And if you've been watching a MicroStrategy, their $21 billion plan, which is basically issue ATM shares, issue the debt, convert senior notes, issue convertible notes, do a preferred convertible note, figure out whatever way to get money from investors or creditors. Maybe if robbing can be made legal, I'm sure Michael Saylor will start going to the houses of neighbors and start robbing them just to buy Bitcoin. Oh my God, no one can stop him. So it was surprised to see that MicroStrategy actually listed an 8% preferred convertible, right? Why? Guys, you guys were saying that there is an infinite demand for convertible notes. Then why have to do this? I don't know. You'll always find a reason to justify. There is some kind of investors who need to have a coupon. Otherwise, they can't invest in, and hence we are doing this. There's some kind of investors or only debt investors, hence we are doing senior notes. And then there are some degens who will just buy our shares, hence we are issuing the shares. You figure out what you want to do. I have nothing to do with the MicroStrategy shares. And don't give me all that crap of increasing the BTC yield and new KPIs. I just don't want to pay 2 times if I want an exposure to Bitcoin. I don't want to pay to Michael Saylor twice. I'll buy, if I want to buy Bitcoin, maybe I'll buy the ETF. At least I'm getting 1:1. I spend $1, I got $1 of Bitcoin. Paper Bitcoin, right? You're not directly buying that. If you're buying an ETF, you're not directly buying the Bitcoin, you're buying a BlackRock is telling you guarantee that they bought a Bitcoin on your behalf. You have an IOU, but at least it's 1:1. I don't want to pay to Michael Saylor, spend $1 to get a 50 cents of Bitcoin. But a lot of people do want to. And that's why he's been issuing these notes and getting confused with the new BTC yield and whatever new metrics, KPIs that he's bringing in. Because if you can't explain it in simple words, because you can't tell to your customers that, hey, you're giving me $1, I'm only buying 50 cents of Bitcoin. Right? Or no, you're basically paying my stock, whose value is only based on the Bitcoin holdings, is valued at $2 for every $1 of Bitcoin holding. You can't say that. So you have to create, I would say, new metrics. You've got a BTC yield. And I don't know how many folks are getting into this. But you know, he's a good, I don't hate him, but he's doing what every CEO should do. Let me put it that way. Every CEO, if your stock is trading higher than what it is worth, you should just issue the stock. I pity for those who are buying the stocks because you are getting sucked into it. He's doing the right stuff. And this week, there is a gold rush. Everyone now wants to buy their gold, to get their gold back, which supposedly in a Bank of England vault. And the reason why everyone wants to buy the gold back is because of the tariff stuff. They're thinking if US going to implement the tariffs, then the gold has become more valuable. So they want to get their gold in before the tariffs are implemented. Bank of America says all the slots are booked up for a few weeks. There we go. If you had a gold, I mean, maybe you did. You have enough gold that you kept it with Bank of England, sure. But this is where this thesis, you know, this gives rise to the whole thesis of why the Bitcoin should become a store of value and not gold. You don't have to depend on Bank of England, and you know it doesn't. The withdrawal window is not closed if it is a Bitcoin, right? Because the gold is a physical stuff. It's not made for internet. It's not a store of value for the internet economy. So we always have to do a wrapper around the gold, like a GLD. I own GLD. That's a wrapper around the gold. I don't have a gold. I have a promise of the GLD. Now, if you're trying to get your gold, there are some speculations that Bank of England may not even have the gold as much as the claims that there are on the gold. Like the classic bank run. Bank doesn't have the cash. Whatever you put in the cash, bank doesn't have that cash. But probably has 1/10 of the cash that you deposit in your bank. And every time we see that 20% of the bank depositors, they go to the bank to withdraw or move their accounts, bank will declare bankruptcy. They don't have. Now the thing is, does Bank of England have enough gold? So again, no conspiracy theories. Maybe because the gold is physical asset, to transfer the gold, you need to have all the securities and all that. That's a logic that Bank of England is giving. Who knows what the truth is? It is not auditable. It's not there's not a blockchain that I can go and see, did you actually move it or not? I bought a gold, does it appear or not? Who knows? Bank of America, it's in their vault. I don't have access to the vault. Anyway, anything else on crypto? Jose says Bitcoin dominance is going up. It is because the altcoins haven't performed well the Bitcoin has. So generally at the cycle, we will see altcoins start to perform. Didn't happen this week because there is so much of a tailwind on the Bitcoin from institutional side. We don't see that on the altcoin side. In the prior cycles, most of this was driven by the retail, which were equally I would say the retail was like a lot more on the meme coins and all the stuff and the altcoins. So we would see that the dominance come down, altcoins will go up. But this time, the huge big money is only on the Bitcoin side. So, and we haven't seen the rally in the altcoins yet, and hence the Bitcoin dominance is higher. If blockchain is so great, how does Korea steal so much Bitcoin? No one has been able to break the blockchain, guys. No one has been able to break the blockchain. But if you leave your key out in the open, thieves will steal it. That doesn't mean that a safe is not strong. It's the strongest safe. You left your key out in the open. What to do? You didn't take care of your key, right? And there are ways in which we can do it. If you want to do a self-custody, then you are responsible. Yeah, Jose says, right? Social engineering. Do you think gold is a hedge to dollar? It is. So gold only, specific periods of a time, gold will work out. And right now, it is considered, it's been let me put it this way. I think gold is a hedge against the unforeseen events in the world macro order. Right now, tariffs has created that we don't know what's going to happen. There's a lot of uncertainty at a macro level. And whenever that happens, folk will start moving towards gold. So today, that is the case. How much tariff, not tariff, what is US going to do? We got a president who don't even know what's the new stuff he going to declare today. So that's a little bit uncertainty out there. And gold performs well during those times. But over long term, gold hasn't been that great because at the end of the day, it's the same as, let's say Bitcoin or anything else. It doesn't produce any cash flows. It's only based on what you are willing to pay me for the gold. That's the only case. So you can never value gold. You can only price gold. Jose saying altcoin runs at the end of the cycle. So cycle should finish in 2025. But like last week we were talking, right? Maybe this time will we change the cycle because a lot of things have changed in the crypto itself. I don't know whether we'll change the cycle or not. But if we don't change the cycle, then 2025, maybe during the last quarter of, no, in the mid of 2025, we should see the peak.
Well,
Unless the cycle has changed.
for Bitcoin, if you look at like last year around March, how it kind of chopped sideways for like 6 months. And that was after the ETF opened, right?
Yeah. After the ETFs were approved in January.
Yeah, exactly. Right. Yeah, but it ran up there was a run and then it kind of just hung out for a long time.
Yeah.
My thesis is that I think it's doing the same thing. It's just going to chop for a few months and then it's going to do the final leg up because that whole sideways thing was because of the institutional involvement. You know what I mean?
Yeah, it's going to be, and look at, say, how publish does it look like? We never know when this will.
It seems like
This
it's
is March 4th. Okay, so
after the ETF, it seems like it started moving in a more orderly fashion, as opposed to if you look at the last cycles where it just kind of just gets really wild and bubbly, and it's not doing that now.
Yep. And it is because now there are options also available, so that a lot of people will hedge it.
Yeah, exactly.
Right. So which will reduce the volatility. I don't have a graph for BTC volatility, but
it's like stabilizing the market.
If we look for a Bitcoin volatility, it is actually coming down. Right. It's over the past years, the Bitcoin volatility is actually coming down.
And the thing too is like institutions, they need time to like take their profits, right? On the leg up.
So institutions are not like Azul, they'll sell off because the Bitcoin fell down $2,000. First of all, they not commit to it. They'll take a long time to commit. And that is why I'm like, dude, the thesis has not even yet played out. I still want to give it 10 years for the thesis to work out.
Of course.
Right. Because they're not, so ETFs were approved last year. There's only one warehouse which have told, okay, now you can invest your client's money into it if the client asks for it. Now, you still can't go to a client and say, I think you should have 5% of your money in Bitcoin because your risk-taking capability is higher. No, you still can't solicit.
Yeah, well, that's also why Saylor was getting a lot of the investment too, because he's
Exactly.
giving them another vehicle for institutional money.
Yeah, so imagine these giants move slow. But we retail investors, we want to see quick moves. Dude, ETF approved. Why the Bitcoin is not at 200K? Come on. No. These institutions move very slow. They will do their due diligence. But once, let's say, they will commit to it, if they're going to put their client money, they're not going to take it out at a drop of a hat, right? Oh, it's gone down 5%, let's take it out. So that's where the more money from institutions coming in, the volatility will reduce even further. So I'm still waiting for like at least 10 more years for the thesis to play out. If it doesn't play
Vivek,
out,
can institutions buy IBIT
of
for
course, it's an
their
ETF.
clients? Okay.
That is the whole reason why when the ETFs were approved in January, the market went up because now, hey, you can buy it. But that doesn't mean that you're going to buy it.
Right.
They still
So
need
we
to move on
saw
it.
hedge funds. We saw hedge funds and, those who are family offices, some mutual funds, they started to buy these. So if you look into someone 13 Fs, some of them have started to take exposure to IBIT. Because you don't have to go and change your charter of your fund. You don't have to go and explain to investment committee what you're buying. You say, I'm buying an ETF. ETF is a vehicle that has been approved by SEC, has been around for decades. Everyone knows that this is an efficient market. There's like the chances of fraud and stealing and all that crap that was associated with the crypto is not there in ETF. But if you are managing pension fund, you're managing, let's say Morgan Stanley's financial advisor group or Bank of America's, etc. There you're talking about a big client, they'll take their time. It generally, if you listen to other folks who have been in this business, they say it is 12 to 24 month cycle that it will take. More conservative the financial institution is, slower it will go. They need to figure out the risk, compliance, legal stuff, what happens, how the conversion happened behind the scene from a ETF to Bitcoin. Is there a price divergence? Do we see that I bought, let's say, IBIT, and let's say Bitcoin went up 4% and IBIT went up only 2%, right? You need to wait and you need to have the data to see all these things. There are a lot of stuff that gets into the decision making. So I'm not surprised that the big wirehouses haven't yet gone into it. And that's why I'm like, we need to have a longer term view on this asset class. So if you want to get in and make a money, get out, there are meme coins. Yeah, there are meme coins for it. So and there are hundreds and thousands, millions of meme coins created every time. All right, so what did I buy or sell this week? I bought a little bit of Amazon after the earnings dip, and I sold a little bit of a Google because I had a covered call on it, which I've been rolling it for the past few months. When the stock went down, I was able to close that call for a profit and sold some of the shares, right? Again, I'm still bullish about it, but just being transparent on the stock buys and sells. All right, last section, earnings, but I think we just hit our 12-hour mark. So you might have other commitments, but tell me, should we go earnings or I can spend another 15 minutes? We can discuss anything else. Otherwise, for 15 minutes, we can spend on earnings. Another question? All right, let's talk about earnings then. Doximity. What does Doximity do? Anyone? Let me ask. Doximity shareholders. It only makes sense if you are a shareholder, otherwise I'll skip it. Doximity shareholders. But am I the only one holding Doximity? Ravish is saying, yeah, we know you. Yeah, I am. I'll skip it then. But this was a good week for Doximity shareholders. I think it was up like 30%. I don't know what's up 30%. Results were good. Okay, health management. All right. So Doximity, you don't come across, good business companies very often. So this is still a small company, recently IPO'd. But when it came for an IPO, it was already positive, GAAP positive company, free cash flow positive, operating margins positive, which generated during, in like last 2 3 years, you don't see tech companies coming IPO when they are actually positive income. So that's what piqued my interest in this company. Of course, stock has been up and down. During the mania of 2021, it was up like 80, 90, $100, crashed down. But if you look at a business, it was still okay. They've added new products and all that stuff. So let's talk about this company. It's a very underfollowed stock. You don't see any analyst or CNBC talking about it, but maybe now they will, because now it's jumping up 30-35%. And if more of a retail people get interested in it, CNBC will bring someone to talk about it because they want those eyeballs. So revenue was up almost 24%. It's a huge beat, beat by more than 10%, as well as the EPS was also a huge beat. Again, don't pay too much. I mean, in this case, you can pay attention to EPS because there's not much of a stuff between the operating income and the net income. They don't have equity investments or no tax write-offs, positive income from that, no accounting gimmicks. Gross profit is up 25% to 154 million. And the net income is 75 million. So $168 million of revenue and $75 million of net income, right? Pretty good. Even operating income, look at, is like say 36%. So pretty good from both perspective. Beat on both. Guidance for the next quarter is great as well. Also, they are repurchasing some of the shares. They bought shares at $48.62 at an average price, and still have 1 million remaining. Let's look at the business side. Free cash flow was up 30%, 610,000 unique providers. So what Doximity provides. So it started its journey as a LinkedIn for doctors. 80%, more than 80% of doctors are on this platform. That's how it started its journey. It used to be called as LinkedIn for doctors. So you could connect with each other. Then they came up with something called a news feed, wherein a lot of these, let's say that the medical companies, pharma companies, they will be able to place the news which doctors would read. Then they also have tools like Q&A. Doctors can ask questions to the other doctors. Then they started building related stuff, near this. For example, you don't have to do a fax. You can send through a passage, and this is all HIPAA compliant, right? But it is purely focused on the doctors, and now they are branching into nurse practitioners and PAs as well. So that's how. And then they came up with the new products around formulation, and now they're building something called a client portal, which will help them to basically make it easier to sell. So otherwise, the sales rep will go to the facilities. They are now investing in the tech to make all that easier, and that's why we see so much traction in the business. They have the AI tools, which grew fastest the last quarter with 1.8 million prompts. This is where the doctors will, they call it, I think, medical GPT. Doctors will ask a question and then they'll answer. I think at the back end, they use both OpenAI as well as Perplexity. A news feed surpassed 1 million unique providers. They raised up the guidance for the full year. Great traction in user engagement. Your quarterly, monthly, weekly, all user engagement hit a new highs. top 20 clients grew the fastest. It was up like 122%, means the clients, they continue to do more business. New products, point of care and formulary, they grew 100% year over year. Now it is 20% of the pharma sales. So overall, I mean, again, the mode that they will have is to do all this with HIPAA compliance. And the relationships that now they are building with the hospitals and the medical facilities and with the pharma companies. I would say a year ago, operationally, they were like a very heavy cost on the operation side, but now they started building these portals, etc., which will allow them to, push up the content much quicker pace for and to make a sale much easier. This is where, I changed my thesis around. I think now I can start buying it and holding it. Is it worth 80? Does this result is worth 30, whatever, 33, 35% jump? I don't know. I don't think so. But markets can be irrational. But from a company perspective, I think it's still it checks many of the boxes that I want to see in a company as a good business. Okay, so that's Doximity. Pinterest. Right. Pinterest was again up 20%. I mean, this week, at least some of these smaller companies on the portfolio did better. There was the beat on revenue, beat on EPS, both. Again, ignore the like 800% gain in the EPS. That is why I want to focus on operating income, because in case of Pinterest, it includes net income was $1.8 billion. Oh, I missed one. Out of $1.8 billion, $1.6 billion was due to some accounting stuff. I don't even exactly understand what is the release of valuation allowance and deferred tax assets. Any CPA here? Anyone in CPA? Someone can care to explain me what the heck this means? All I know that this is not related to their business. This is something they might have gotten tax relief, etc. Maybe I have to ask some of my CFO friend to see. Anyway, last quarter, Q4 of 2023, it was 800 million. So they got almost additional 800 million of a comparative higher income through this. But that's why I want to focus on operating income. 33%, not bad. 33% is still good, right? So revenue grew up 17%. Your operating income grew up 33%. This is where you see your operating leverage. And I want to see this. So for every dollar you earn, you don't have to spend the same amount of money that you were spending earlier. You can spend less and make more, right? And the difference flows onto your margins. Gross profit of everything green. First ever quarter of $1 billion revenue. And I like the CEO, the new CEO that came in. I think I shouldn't call him new anymore. I think close to 18 months ago, Bill Reddy, who joined from Google. I like the focus is that this is a company where you go with an intent to build something, and you won't be distracted if you're shown the ads that will help you to build something. Yeah. This is the platform where the ads are not intrusive. And still, the old management was never able to capitalize or monetize it. And which was like, dude, what the heck are you doing? And no surprises. The CEO was kicked out. We got a Bill Reddy who came from Google, and has helped on understand this whole e-commerce space and how to monetize it. But it's a turnaround story. Turnaround, first of all, seldom turn around. And if they do turn around, takes time. So you got to be patient if you want to be in this one. So I had a high teen revenue growth in all quarters of 2024, which is great because over the previous quarter, we are seeing single digit growth. So revenue is growing. Margins are better. They're seeing some good traction with AI tools. All the business metrics are moving in the right direction. Monthly active users, they got a 550 million monthly active users. It's a decent enough user base you have who wouldn't mind if you show them the ads. But then, of course, you have to have a call to action on that, how the purchase will happen. But over the last, I would say, yeah, 12 months, they've been building all those deep linking into the merchant side, making it easier for merchants to upload their catalog and, stuff like that. Takes time. What I also liked was that on the monetization perspective, they did a good job on, US and Canada and with non-US and Canada, which is like rest of the world, up 27%. So we really look at most of the social media, the biggest revenue generator is US and Canada. The biggest users count is the rest of the world, right? But the rest of the world can't, when it converts to the dollar term, you get the average revenue per user is very less. Even in this case, average revenue per user for the rest of the world is close to 20 cents. It's 19 cents. Whereas in US and where is the US and Canada? Oh gosh, I missed the US and Canada here. US and Canada, I think is close to $8. So that's what we're talking about, between $8 and 19 cents. Right. And but they did a good job in the rest of the world is up like 30%. Their guidance, they're guiding for 13 to 15% growth next year. Stock was up. I think still good. But remember, this is in a turnaround story. So you have to be patient for the story to play out. But I'm more hopeful now than ever on Pinterest. The previous management was like, we will, I don't know. They didn't focus on monetizing it. Let's talk about the next one. Uber. Revenue up 20%, which was beat. Gross profit was up 4%, which is fine. You're and margin barely up, but still they're having gross margin of 40, close to 40%. It's a low margin business. We all know you need to pay to drivers. Unless you have a robot taxis, it's going to be a low margin business. Uber, anyone investing in Uber thinking that's a pure software company? No, it's not. Even the Uber's official name is Uber Technologies. Its margin is not like tech company. You can't download a driver. You have to pay to the driver. So the margins are like 6%, 7%, 10%, right? Things will show up in your financial. If you're claiming to be a tech company, you're using technology. That's fine. But at the end of the day, you're a taxi company. Your margins are like taxi margins, maybe better than them because you're using tech, right? Well, let's not kid ourselves thinking Uber is a pure play tech company, right? But it's a great company. I love the CEO. Listening to Dara, I think I did I did tweeted it saying I'm having a man crush on Dara because when I listen to him, he's so clear in his thinking. It's just fun to listen to Dara, right? Their net income is up 400%. We saw, on Uber, 400%. But what? It was helped by a 6.4 billion out of 6.8 billion. 6.4 billion came from again tax valuation and some stuff. And of course, a reevaluation of the equity investment. Uber has got an investment in Grab, Aurora Inventions, some other tech companies. And if their stock price has gone higher, even if Uber does nothing, it will recognize the gain. And even if the stock price has gone lower, they'll have to take a loss. So when a company has got a lot of investments, makes sense to look at. I would say always look at the operating income first before you go to the net income and then see if there's a huge difference. What is causing it? In Uber, if I only look at a net income, like, dude, wow, $11 billion of revenue and $7 billion of income. Great. Come on, not that great. It's good, but not that great because it's been helped by the other stuff. They got a decent free cash flow, $1.7 billion, and they can put to some good use. either invest in the company or maybe do a share buyback, pay down the debt if they want to. Strong balance sheet with $7 billion cash and equivalents. Pretty good balance sheet. Oh, so they retired the debt already. They retired $2 billion of debt. Yeah. If you're generating free cash flow, what you can do? Pay dividend, it doesn't pay. Retire debt, this is what it did. Buy back shares, they'll do it, right? Or invest back in business, which probably they are. But they got a $7 billion even still left out. Trips is up 18%. So Uber has got a 3 big businesses. One is, which is mostly, I would say 4 big businesses. One which is basically you and I, we use it. So one they categorize, one is delivery, other is mobility. In the delivery, it is like you and me using it. The other one is a freight, right? Wherein they use it for the shippers and the logistics providers, the trucks, etc. So Uber has built in software, etc. to manage it. It's still a smaller portion of the overall revenue. If you look at your freight revenue, it is what, 1.2 billion, right? Mobility is their biggest revenue, which is where Uber ride hailing, which is almost $7 billion. And delivery is what the Uber Eats is, right? Uber Eats, Postmates, some of the other acquisitions that done. That is like $3.7 billion. So, but what's the interesting stuff to look at is the trips grew 18%, but the mobility revenue is up 25%, which is, it means average revenue per trip is going higher. The drivers are making this, at the same trip, you're able to get more revenue. Drivers and couriers earn $20 billion, including tips, which is up 16% year over year. This is great. You need to keep your drivers happy. Drivers have no loyalty. Consumers have no loyalty. We'll have both app driver, Uber and Lyft. Driver has both the applications on their platform. If you don't keep them happy, they'll switch to Lyft. Uber One membership has reached 30 million consumers. Gross booking, we can skip. The booking guidance was lower than the actual in Q4. So in Q4, overall, the gross bookings was $44 billion. Now they gave a guidance of $42 to $43.5 billion. Management says that we expect $2 to $3 billion as a currency headwind. So now with US dollar is getting stronger. So if you look at the US dollar, I generally don't look at the currencies. What's help me out? What's the index for the US dollar? I forgot. DXY. Thank you. DXY. Should be what, 106, 107, or 108, right? If the dollar becomes stronger, the companies that generate revenue outside of US, it's a headwind for them. Now, Uber is a global business. Now, as the dollar is stronger, you will see a lot of companies, let's say Nike, Apple, those who have businesses in, let's say, China, and a substantial amount of business in foreign countries, their CFOs will come and say, we see a dollar headwinds because the dollar is becoming stronger. Your earnings and the revenue when converted into dollar become less. So Uber management say the same thing. Wall Street doesn't like it. They punish the stock. Capital allocation, they actually accelerated the share repurchase. They bought $1.5 billion of Uber common stock. Good thing. Thank you. As a shareholder, I thank you. Stock was down because the booking guidance was low, right? My plan is it's generating decent cash flows, very disciplined when it comes to capital allocation. The new CFO that they brought in, Prashant, forgot what's, it has got a long second name, but he's a new CFO. Listen to him. He's good. I mean, his thinking is clear. He is talking on behalf of shareholders. That's the feeling that I need to get when I'm listening into it, right? So, but there's an uncertainty around robotaxi. Every time Elon Musk will say something on robotaxi, Uber shares will sell off. And so we don't know how this whole robotaxi will work out. Uber has forced partnerships with majority of the autonomous vehicle providers. but still there is an uncertainty, right? This is one. It could be a tailwind for Tesla, headwind for Uber. Maybe it will be a headwind for Uber also, because they may not have to employ all the drivers, but then they have to pay to the AV vehicle providers. We don't know. So that's an uncertain part, right? So stock was down, but if you look at the stock today, sure, it went up. What gives? Anyone notice what happened to Uber? Bill Ackman. Bill Ackman of Pershing Square Capital, they revealed as a part of their whatever 13D filing that they have more than $2 billion invested in Uber. And of course, then they start saying, oh, Dara is great. Uber was a mess with Travis. Of course, he didn't say Travis, but say under previous management. And really, if you've have been Uber shareholder watching this, Dara did change the company, change the culture. Listening to him in a conference call is music. And of course, he's shareholder friendly. He's turned the business around. But so that's what caused the market to take note of a Bill Ackman investment into Uber, and it pushed the Uber prices up. Now, Bill Ackman is a very savvy investor. He has earned his reputation, but you just should not follow Bill investor blindly. Everyone do their mistakes. Remember Herbalife? He lost billions of dollars in Herbalife. Verdicts happens. It's life. No, you can't get every bet right. Bill Ackman bought Netflix when it fell down 10-20%. He sold it off. After that, Netflix has gone up 4x. Right? So, but I listen to these people because they have earned their credentials, but then don't blindly follow them. Build your own thesis around it. Yeah, that's all I'll say. But market was positive even after the earnings. It sold off. But boom, boom, boom. I'm like, what the heck happened? Because I had when it sold off, I put a strangle on it. Now my strangle is already in the money from call side, which is okay. Because there is I can afford to do one covered call on it and hold the rest of the position. So I've always had some form of a covered call on it. If I'd known Bill Ackman is doing it, I would have put a covered call at maybe 80 or something. But really doesn't matter. So I'm not chasing it, but that's where the market got enthusiastic about it. So, all right, the last one is Google. Stock was funny. So what happened? Revenue was up 11.77%, but so this is what's fun, right? It barely missed. There's a slight miss on the revenue. Gross profit is up 14%. Everything else sounds good. But there's a slight miss on the revenue. Instead of 96.67 billion, they only did 96.47 billion. Yeah, it was a miss, but when you're talking of hundreds of billions of dollars, come on. What does a few million mean here or there, right? Business Metric Cloud grew 30%, which is good. YouTube ads grew 14% to $10 billion per quarter. Advertising is growing is 11% to 72 billion. What happened to search is dead? Whole narrative of search is dead. Dude, they're still growing advertising, which is mostly coming from the search, by 11%. The whole narrative around no one will go to Google because no one wants to click on 10 blue links. If it is a good company, maybe they'll figure a way out to stay ahead. Of course, I mean, they're not growing anymore at 20 or 30% because of the competition. And of course, the base has become much bigger, but still 11% is an impressive growth for a business segment that was considered to be, no one would search anymore. Right? Cloud grew 30%, but it was less than the street expectation of 33% growth. That's why the stock sold off. Number two is they had committed $75 billion of capex. So they're saying, you're not growing 33% what I wanted you to, and you're committing 75 billion of capex. I don't like you. So that's why the stock sold off. right? So it was down 6%. I think it's now it's further down over the last 1 or 2 days. And the margin, overall margin is lower than the past 3 quarters. That's what I noticed. I don't know if stock sold off for that or not, but that was something that I little concerning to me is, guys, your capex is increasing, but margin moving lower. Not that great story. And maybe this will what will happen. If you do a capex, you get the huge expenses upfront, but the revenue and the benefit of that expense will accrue over time. But for now, it hit my margin, right? So anyway, that's what it did. One thing that you should note here, look at a YouTube. It did close to more $10.5 billion, right? Annualize it. It becomes $42 billion. $42 billion on streaming video. The biggest company that we know, most successful company that we know in the streaming space is, come on, Netflix. How much Netflix did $39 billion in revenue in 2024. Right? YouTube is bigger than Netflix, but it's a part of an alphabet, part of a bigger corporation, so it doesn't get that good a valuation. But from a numbers perspective, if you ask anyone who is the biggest streaming, Netflix. Maybe second number is Disney. Look at a revenue. YouTube is the biggest streaming revenue generator company in US, not Netflix. I'm analyzing the YouTube and this is the actual. So, but you get the point, right? There's a big business hidden inside Alphabet that we should pay attention to. Last one is AMD. I didn't have a post, but let's go to AMD. Why it's not showing up here? Okay. Geez. Close this. Everything else is good. So the revenue is up 24%. Gross profit is up 33%. Margins, gross margins, 50% gross margin business. Operating income is $871 million. This is great. What did they do? I really like that their operating income has grown up to $871 million as compared to the previous one, which means it's and even if you look at quarter on quarter, it's up 20%. Year over year, it's up 155%. Right? What I don't like on AMD is operating margin is only 11%. Right? So looks like that's what it has been. It's been a single, not really like it. I mean, it's a, but AMD does not have its own fabs. So why is operating margin so low? 11%, 10%, 4%. I mean, I'm looking at last 4 quarters. Why is operating margin so low? I don't like that. In the nice cash flow, operating cash flow up to 41%. So looks like maybe either the depreciation or something they have done on the operating side that their cash flows as well as the operating income has gone higher. Expensive from an earnings perspective, but it was not that expensive of a couple of years ago. But now looking at what the market is trading and where its earnings are, it is expensive. So now when you talk of AMD, right, generally it is in conjunction with NVIDIA, right? I have a dollars to spend. Should I on semiconductor? NVIDIA is already high. It's gone up. Can I invest on AMD? Should I buy AMD? Right? Because the stock is just going down, right? The trend is downwards. Now it is 106. Whereas NVIDIA, its trend is up. It's been a little choppy, but the general direction is up. The idea is, should I buy AMD because the stock is cheaper? That's what I want to focus on, the business of this, right? And if I want to look at overall, the high quality businesses, not that great. It's single-digit operating margins. Looking over the average of last 4, 5, 10 years, so that it normalizes for maybe some expansion that they're done in a recent times. Go back all the way to 15 years. It's always been almost single-digit operating margin. Right? Close to single-digit profit margin business, net profit margin. They have a free cash flow. So, but if I have to compare this with NVIDIA has not reported its Q4 results, but I think I will have something for till Q3. One is the last two NVIDIA. Thank you. Q2. Okay. Anyway, just from a comparison perspective. Okay, let's look at NVIDIA. It has only till Q2. Look at the business. Both are in same business. None of them create their own chips. Right? But look at the operating margin, 60%. NVIDIA is like pure software operating margin business. Or maybe I'm not too close to, can someone tell me what's the business model difference between NVIDIA and AMD? None of them create their own chips. They only design chips, right? And then they have a software. AMD does it with, they spun off their chip manufacturing as global foundries. But look at the business. Of course, this is like as of Q2, but anyway, we are looking at 2022 year behind. Let's come to recent one. I went back to 2022 just to ignore everything that's related to AI, right? Prior to 2022, there was no AI. AI only came in November 2022 when ChatGPT was done. But still, NVIDIA as a business, they've been performing well. And I go back, let's say, before 2020. Still, they are better. Jensen Huang knows how to run the business in a better fashion. AMD, on the other hand, I'm not that enthusiastic about it. Let's go back to the end of 2021, right? What did we pick for NVIDIA? So end of 2019, right? Let's go to end of 2019. So that's a business difference. GPU is new for NVIDIA, and AMD was always underdog with CPU. Yeah, I mean, now they are, I think, a dominant dog. Intel is also not doing good anyway. So now there are so I think overall in the market, there are questions around if GPU could be just replaced, if all the CPUs, servers will be replaced by GPUs itself. What do I need CPU for? If the price of GPU come down, it can do all the other workloads, then that's what actually Jensen Huang is telling the market. There is $1 trillion of data center replacement revenue that is expecting over the next 10 years, that all the servers will be replaced by GPU servers, the CPU servers will be replaced by GPUs. Then what the play that Intel and AMD has? I still hold Intel because only for a reason, because they have a foundry business which is strategically important for US, not for their CPU business, right? And I know Intel and AMD, they're trying hard to keep CPU and x86 architecture, but you have to think, no, why would I not want to have a faster processor? And again, I'm not that technical enough to know what workloads can CPU do better, faster, cheaper than the GPUs, if the cost of a GPU is also drastically come down. That's the question that we need to answer. In any case, now we've gone back to an era where there was no AI, right? Look at the margin profile of AMD and the margin profile of NVIDIA. It's different. NVIDIA was in demand for crypto. They always figured, so who stopped AMD from looking into crypto? Right. But the tech was CPU, not can't do all that computations with the GPU can do. And NVIDIA figure out a way to move into the next hot segment. Now the next hot segment that which they are already talking about is digital twins, automotive. And not only just the chip, NVIDIA has got all the software libraries to address those ones, right? So he's all like forward thinking. And again, I don't own an AMD. I'm not looked deeper into AMD. So I don't know. Maybe Lisa Su is also so forward thinking. All I'm looking at as a purely investor perspective, if I were to compare these two businesses, I'm going to put my money behind NVIDIA because it looks to be a good business from the numbers perspective over a long period of time. Now, in the long period of time, tech changes have happened, CEO changes, in this case, probably not happened, but economy has changed, macro have changed, everything have changed. But still, NVIDIA comparatively seems to be better business for me. That's my thought. But now, just looking at this quarterly result, quarterly results were operating income up, net income was down. But I think quarterly results not that is still okay. Revenue up 24% is still I would say a respectable one. I don't know what the expectations were. I didn't follow this, so I don't know. Did the stock get punished after earnings? AMD, come on, not too much. Okay, 6% down after earnings. Oh my God, it's how low it is. Oh, okay, not too bad. You're back to the 2023. So basically lost everything, all the gains of 2024. That's where it is. Right. Alfred says the AMD release date is March 6 for a new, faster, cheaper GPU. Yeah, the question is that will they be able to eat lunch of NVIDIA? Sridhar, isn't many years back Intel was keeping them alive? Exactly. Yeah, so Intel was feeding kind of AMD to keep antitrust regulators off its back. So and now less we talk about Intel, better it is. Gosh, they created a mess for themselves. I think that's what innovator's dilemma. You didn't want to let the CPU market go away. When Apple told you as an Intel, guys, do you want to make a chips for us? You're like, and Apple is a tough negotiator. You're not giving me so much margin. I don't want to make chips for you. So Apple switched to ARM. And then we know what happened. And now they're trying to get into foundry business where TSMC is so strong that unless it is helped by the government, which is why government is helping, that's the only play that I have for Intel is you're strategically important for US. No one else in the US companies actually can make a chip at the scale at which Intel can. They have not made it yet, but they can. All right, guys. I think that's it for today. Thank you for staying over. Tomorrow is Super Bowl, and I'm not a big football fan, but one football match that I watch every year is a Super Bowl match. Directly going to finals. And my kids were telling me Chiefs are back in here. Like Chiefs are there every year. I don't know what she told me. Other team also who are they playing against? I don't know. So we're gonna have some fun, watch some football, and then that's the day on which most number of pizzas are being sold. So if you're a Domino shareholder, you need to keep an eye on that one. All right, watch for halftime commercials. Yes, and then you know which companies to. I won't say short, but which companies to stay cautious of. There are two things that I've seen: halftime commercial and Forbes. Right? The curse of being on Forbes 30 under 30 and the halftime commercials. All right, enough of crap. Gosh, how much did we talk today? All right, thank you everyone. Won't waste your time anymore. We'll meet again. Hold on, next. 22. Okay, 22 evening I'm out. Yeah. So we'll meet again next week. At least oh okay, next week I'm gonna check with my kid. We may go, nothing planned yet, but if we do, then I will cancel it. We'll see. All right, thanks everyone.